you're watching NDTV Profit. I'm Mahima Vachrajani. Titan is in focus on the back of its Q4 earnings. It's a good set of numbers. Numbers did beat what the street was expecting in terms of its estimates. Margins slightly ahead of what the estimates were, and this is on the back of hedging gains. Overall, there was buyer growth seen in gold coins as well as studded jewelry. Now, to discuss more as to how Q4 and FY25 has panned out and what FY26 looks like, we're joined by Ashok Sonthalia, who's the CFO of Titan, joining us now. Welcome to the show, Ashok. My first question to you is that overall your jewelry margins have improved, and this is of course on the back of a one-off, which is due to hedging. Just wanted to get a sense of how the margins would have been if that one-off would not have been there. And secondly, what is the outlook like in terms of FY26 margins?
So, yeah, thank you very much, Mahima. I think we are quite happy and satisfied with the quarter four performance. As far as margin is concerned, just minor correction that while it was a combination of operating leverage through better cost management and hedging gains, which came through the forward premium. And they are also, part of it is permanent and part of it can get reversed, going forward. FY26 started well. Akshaya Tritiya was this time in the month of April, and it has gone well as far as we wanted it to be. Gold price increase, unrelenting increase, has been creating pressure on various aspects of the business, including consumer sentiment. And therefore, sometimes it is difficult to predict FY26, but still we believe 15 to 20% growth range for the company. And for jewelry division, we have guided 11 to 11.5% EBIT margin band we should able to maintain if everything remains the way they are. Lot of uncertainty going around us. To that extent, we must understand that these things can undergo change if things really doesn't improve from here.
Right, and just on that, because gold prices are on the rise, a lot of these jewelry companies read, even in terms of their business update, there was a trend that I've observed is that gold coins and gold chains are something that have really picked up, because people are not now willing to pay that making charges part, right, in terms of buying gold coins. Just wanted to understand, because for you also gold coins was a significant growth of almost 64 odd percent. Is that a trend, a structural shift because of the rising gold prices that you are seeing, and is that here to stay?
So when gold prices have all of a sudden went up, in last quarter also, while for last 12 months they have been going up, but last quarter again saw another burst of price rise. People generally, the investment orientation takes center stage, and at that point of time, coin or low making charge jewelry becomes a preferred vehicle for people to invest money. Adornment takes a bit back seat. But as we move into quarter one, and we all know that this quarter one compared to last year quarter one have much more spread wedding days, etc. And weddings would require ornament and adornment kind of jewelry. There people will not be looking for coins and simple chains, etc. So we think it's a temporary thing. Once people get used to this level of pricing, because right now there is still expectation in the mind of consumer, perhaps some correction would come. And it may not be completely unfounded, but if that doesn't happen and people still get used to this level of pricing, then I believe again adornment would start taking center stage.
Understood. And in terms of your overall gold lease cost, that has moderated, and even that has, overall has had a positive impact on your margins. Just wanted to understand as to what this means in terms of improvement going forward as well, and overall, how does that impact your financials positively?
So gold lease actually, Mahima, has been a great product for Titan to get into, the gold procurement and our working capital management. We have been enjoying very, very fine rates, best in the industry, and availability of limit is also pretty generous for us compared to some of the competition. What happened after the US tariff situation started escalating? Uh, in a knee-jerk reaction, GOL cost actually doubled, more than doubled in February, March, which has started settling down back to the level, but still it is 75 to 80 basis point higher than what it has been in FY25. So to that extent, this development is will create some pressure on the interest cost. It has settled down. It might further settle down if situation improve. But otherwise, just in economic or financial term, FY26 will see some higher interest charges in our PNL because of the fuel interest rate increase.
Okay, understood. And in terms of, when I was listening to your con call, there was a mention that you are planning to add 40 to 50 odd stores in FY26, plus overall also expand or improve your 50 to 60 outlets that are already there. What is the kind of capital outflow that you're expecting, a rough figure there, and will that take place through internal accruals, or will there be some kind of external borrowing?
So for retail expansion, I don't think we need borrowings. Ours is a franchisee model,
Correct.
Mahima. So most of the stores are done by franchisee. Our preference for opening company store is, the least.
Correct.
Only out of 50, very, very few single digit, low single digit number may be company store. And for that only we need to do CapEx. So that way retail network expansion is CapEx light. It is the working capital and the gold prices increase is forcing us to leverage a little bit and get into short-term borrowing. But retail network can expand without any strain on our capital.
Okay, and in terms of one thing that I was observing recently as well, because gold prices are going up, but professionals are still preferring light jewelry, which is a focus of Carrot Lane as of now. Just wanted to understand that for Tanishq, if I'm not wrong, you're not present at that sub 50,000 price points. Is there a planning that Tanishq will foray into that sub 50,000 mark jewelry, or will Carrot Lane only do that?
uh, we really don't divide so much between Carrot Lane, Mia, and Tanishq. All three brands, depending on what their customer cohort wants, that they keep kind of innovating and keep creating customer value proposition. Tanishq also had its daily wear in sub 50,000 band, and but mostly gold related stuff, gold jewelry, and some diamond jewelry. But now with the price increase of gold, we are in a way forced, Tanishq is forced to have less collection on sub 50,000. And now customer have good choice in Mia and Carrot Lane. So of course they are kind of getting more interested in experimenting and buying those brands. But between these three brands, and then four brands actually, but on the lower side, three brands, Tanishq, Mia, and Carrot Lane. Zoya is on the upper end of the value spectrum. They are able to cover all sorts of price point and all sorts of consumer demand, and that's a good part of Titan and jewelry division.
Right, and that's true, and that's being visible in the kind of growth that Carrot Lane itself has seen, over the past few quarters. Just wanted to also understand that there was one thing that I heard in the con call was that now diamonds are being sold at a lower carat as they were sold earlier. Do you think that this is somehow an impact of lab-grown diamonds that is happening on natural diamonds?
Uh, uh, you see, we are not yet able to establish that whether they have cannibalization impact. On the higher size of carat, which we are talking about 1 carat, 2 carat, 3 carat of natural diamond, we do see some hesitancy in the consumer behavior purchase, and that perhaps can be attributed to the noise which LGD has created, because there was an investment angle also associated when Indian consumer bought solitaire. But as far as the small diamonds are concerned, or lower caratage solitaires are concerned, we are not seeing that, directly impacting. Lab growns have started coming up, various players have come into the field. It's still a very, very small and niche market, but growing. And we will see. One has to wait and watch to see what interplay happens between the two.
Right. In terms of competition, what's the sense like there? Because new entrants are scaling up their business, and does that overall impact your decision of marketing spends?
To some extent, yes, in those catchment, etc. It's not the pan India advertising. Now the advertisings are also very focused, very regional, and even at catchment level, the promotion activities which you do, you of course are cognizant of what competitive activities are happening in that catchment, and then you respond to that. But this competitive intensity has been there, Mahima. Now we are used to it for last, I would say, 2 years. And then one must also understand there is still a very high, two-thirds of the market is still unorganized in jewelry. And for sure, organized is gaining over unorganized. So there is a room for few organized players to grow at the expense of unorganized. And I think that is what we are seeing.
Got it. One last quick question, Ashok, in terms of the current situation that we are facing, in terms of what is happening between India and Pakistan, and it's almost like a war-like situation at present. During these times, if this continues, and God forbid it should not continue, but if this continues, discretionary spending is something that gets affected first. Any sense there, your outlook as to how, in the past you would have witnessed something like this, and what's the outcome been like, and how will it overall impact Titan sales?
So, like I would not remember a particularly war-like situation, but one thing which happens that there are logistical disruptions happen. Now already you are seeing in north and west, some of the cities are getting under restrictions. And of course, at that point of time, going out and shopping is the last priority for anyone. And for cooperating with the government authorities, we will also follow all the stuff which needs to be done for the kind of easy operations in those western near border cities, etc., where we are present with some of the brands. Um, Other than that, at this stage, we don't see. The good part is that jewelry, while seem like discretionary but not discretionary in India, sometimes deferment happens, but the demand returns and consumption happens. So, if the war-like situation persists for some time, the May month may see some disruptions, but we are quite hopeful with the weddings, etc., still happening. The demand would not perish, it will come back, and our customer and some new customer will still continue to prefer Titan jewelry.
Got it, Mr. Ashok. Well, thank you so much, for giving all those answers so candidly, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you very much. Take care.